The gold argument is not about we're going to hit 5,000 at the end of the year. The gold argument is simply this coin, this bar, this ounce, this milligram is doing far more for you than this quarter, this nickel, this dollar, this dime, this 20, this 100. And so that, I think people don't need to be gold bugs or gold critics or think that we're just selling our book. We're selling conviction. That's just history and math. And I don't see any way out other than inflation, and which means the debasement of our currency. And so that's information, and it's a Civil War metaphor, but ironically, from beginning to end, I see so many parallels. We've shot ourselves in the foot, and it's been slow and steady for years.
The BRICS coalition's recent expansion, with the inclusion of Saudi Arabia, represents another significant development in the ongoing challenge to the dominance of the U.S. dollar. According to Matthew Piepenburg, a representative from Matterhorn Asset Management, the value of owning gold, whether in the form of coins or bars, lies in its ability to preserve and potentially increase in value over time, especially when compared to traditional fiat currencies. On Thursday, September 7th, 2023 gold prices saw a slight uptick, partly due to a minor pullback in Treasury yields, which offered some relief from the strength of the U.S. dollar. Piepenburg underscores that the continuous decrease in the value of fiat currency is primarily driven by inflation, eroding the purchasing power of money over time. Piepenburg also points out that the devaluation of the U.S. dollar has been a long-standing trend, particularly since the nation abandoned the gold standard in 1971. This move was aimed at controlling inflation and preventing other countries from exchanging their dollars for gold. Presently, no country adheres to the gold standard, though some still maintain substantial gold reserves. Just before you watch Matthew Piepenburg's interview and latest market trends, make sure to subscribe to our channel and give this video a big thumbs up. Piepenburg emphasizes that the BRICS nations are accumulating gold as they see the intrinsic value of the metal in the current financial landscape. China has purchased the most gold, followed by Russia and India. India has added gold reserves for the first time in over a year, and there is potential for further acquisitions in the coming months.
This is why gold, smart gold, in my opinion, is always investor gold. It's not speculative, because you can trade long or short the gold markets, the PM markets, the COMEX markets. You can do that. And that's a different mentality. Gold investing, you and I can be very patient, whether gold goes up or down, or the dollar gets weaker or stronger, inflation, deflation, volatile moves in those directions. We just know that the currency's only solution is more liquidity through unnatural means, which is inherently, by definition, inflationary. When the purchasing power of your dollar has already lost 98% since 1971, when we got off the gold standard, the end game is clear. And again, that's why I use the Gettysburg analogy, the Civil War analogy. The end game is clear. And ironically, there was just a bunch of gold found in a hole in the ground in Kentucky from the Confederate Army that dates back to the Civil War. It was a bag of gold, because the Confederate Army knew that the Confederate currency, like the U.S. dollar, was getting diluted. It was worthless. So they needed gold. They stuck it in the ground. Over 160 years later, someone found a bag of gold, Confederate coins. The irony is, if they found a stack of Confederate, Jefferson Davis dollars, they'd be worthless. Other than a museum piece, they'd be worthless. But because they found gold, sat in the ground all those years, that gold went massively up in price. Now, we don't have to wait 160 years for our gold to preserve our wealth. It is a constant. No matter what the COMEX and the LBMA markets do to gold, it is holding its value more than this inflation-facing U.S. dollar, euro, yuan, yen, kroner. They're all going to get eclipsed by the death of their purchasing power, slowly, then all at once. That is mathematical and historical. Saudi Arabia entering the BRICS circles, it's not a good sign for the next 5 years, 4 years, or 4 months. These are slow trends. They don't happen overnight, but it is another watershed moment. As again, Grant Williams, Jim Rickards, Rick Rule, myself, everyone who was tracking the weaponization of the dollar last year when the war broke out said this was going to be a massive policy failure. And not only has the war, in my opinion, been a policy failure, this was an avoidable war. It's now gone far too long in its death count. The economic consequences of this war are obvious. And I don't think the BRICS have to necessarily even come up with a gold-backed currency or even a gold-backed trading currency. They recognize that even if they don't have an agreement, because that's hard to get all these countries to trust each other, they do trust gold. And they do know that they can buy more with their gold in Shanghai or in Moscow than they can in London or New York. They all know this. And they also know, like Russia did in 2008 when it started stacking gold in its reserves in a major way, that, 2008, An ounce of gold could buy you 8 barrels of oil, and today it can buy you 30 barrels in gold. So gold as a asset class, whether it's gold-backed trade currency or not, gold as an asset class has far more trust and value among these BRICS nations than it does the US dollar or the US Treasury.
Piepenburg points out that both the UAE and Saudi Arabia are actively exploring alternative avenues for conducting business that don't rely heavily on the US dollar, US Treasury bonds, or an overburdened US Treasury system. Notably, Saudi Arabia has significantly reduced its holdings of U.S. Treasuries to the lowest levels in over 6 years, selling more than $3 billion worth of U.S. government debt in June and bringing its total holdings down to $108.1 billion, as reported by the Treasury Department. The UAE has similarly divested nearly $4 billion in U.S. Treasuries. This shift away from the US dollar is being accelerated by various factors, including sanctions imposed on Russia due to its Ukraine invasion and an increasingly confrontational stance taken by Washington towards China. As a result, both Russia and China are actively diversifying their reserves away from the dollar, with their central banks reducing their dollar holdings. Piepenburg argues that using the dollar as a geopolitical weapon could backfire, as it could lead countries to reduce their reliance on the dollar. Now, let's move towards the interview.
This de-dollarization theme never gets old because it keeps expanding. And despite a little bit of, I don't want to say hype, but I think overdrawn headlines on this BRICS gold-backed currency, which I never thought was going to happen in South Africa in August. Nevertheless, the de-dollarization theme is sensational enough without any kind of need to exaggerate. And the fact that Saudi Arabia and the UAE and some of these other countries are coming in, and so many other nations want to be in, is just a reflection of the distrust of a weaponized dollar and a strengthening dollar, looking for a way to transact settlement outside of a debt system, outside of an overstretched U.S. Treasury, outside of a weaponized dollar. This trend, as I said a year ago when it began, was going to be a slow process, but an irreversible process, that the genie never goes back in the bottle when you weaponize a world reserve currency against a major power, economic power, and a nuclear power. And again, this was something Robert Triffin warned Congress in the 60s. John Maynard Keynes argued, decades ago, and even Barack Obama warned against in 2015. We were talking about weaponizing the dollar against China or Russia, any major power. The net result is going to be a move away from the demand for that dollar and a demand for that weaponized dollar and, frankly, weaponized and discredited U.S. Treasury bond. Anytime you see a country like Saudi handshaking and warming up more to the BRICS, and that means really Russia and China, more than to the United States since the 70s. That was our number one partner to have demand for our dollar and really control, or at least cooperate on that oil price. When you make not necessarily an enemy out of Saudi Arabia, but when you lose that friendship, when you lose that connection slowly but surely, like a dying relationship, it ultimately has huge costs. What happens in the next 12 months? Interest rates can make the dollar stronger. The net result between the bond market, the inflation market, or the inflation data, all of these signs, the inflation, deflation debate, the strong dollar, the weak dollar debate, the currency issues in general, the U.S. Treasury market, QT versus QE, and ultimately precious metals, all of it is tied to this unbelievable debt market, this discredited U.S. Treasury. And the BRICS expansion is just another symptom of a U.S. bond market that is fatally impaired at this point. And there is no good solution for the U.S. bond market, whether they continue to tighten or whether they ease. It's a disaster either way, in my opinion.
Some experts, such as Daniel McCarthy, a strategist at dailyfx.com, speculate that China and Russia might be setting aside a portion of their considerable gold production with the intent of supporting a new currency that could challenge the dominance of the US dollar. In light of these significant developments, how might these evolving economic dynamics impact the future of the global financial system, and what could be the potential consequences for international trade, currencies, and geopolitical relationships in the years to come? Share your thoughts in the comment section. If the video resonated with you, make sure to join our community by subscribing to our channel and enabling notifications with the bell icon. Surprisingly, around 80% of our viewers haven't subscribed yet. We're aiming to reach 3,000 subscribers in the next 2 weeks, and your support could make a big difference. Thank you for being a part of our community.